We are joined by former teacher, current financial planner, and 24/7 student loan forgiveness guru, David Gourley. In the wake of the Supreme Court ruling against the Biden administration's student loan forgiveness program, the administration last Friday, July 14th, 2023, announced a new $39 billion student loan forgiveness program. David is going to discuss everything you need to know about student loans. Welcome back to the pod, David.
Thank you very much, guys. I really appreciate you both, and I love being here.
We appreciate you so much, and I know all of the clients you have helped feel the same way. All right, let's back up a little bit. Start with a program that was struck down by the Supreme Court. What was that?
So that was the $10,000 forgiveness, or up to, well, it's either $10,000 or $20,000 if you were a Pell Grant recipient. And basically, it started off, where they said that this was a guaranteed thing, and then it went to court, ended up in the Supreme Court, and they blocked the cancellation. Was the quick rundown of that.
And it seems almost immediately they seemingly, I don't know if pivot's the right word, but announced something, and that was last Friday. What was proposed / announced last week?
So there was actually two announcements after the cancellation. The first one was on the same day of the cancellation, and that was the announcement of the new repayment plan, which is the saving on a valuable education. Of course, we have to turn it into an acronym, right?
Yeah,
so SAVE, this new SAVE repayment plan. And then the second one, which I think was more of a headline grabber than anything, is this $39 billion in forgiveness opportunity. But really, they announced that in April of 2022. It's actually the IDR waiver that they packaged up to look really good in a headline. And I think it's just to make sure that the American public understands that student loan relief is coming. Also, by a lot of the people that I listen to who are much more knowledgeable even than I am on student loans, they predict that 39 billion is not even going to touch how much it actually is going to be. They're predicting that this is going to be into the hundreds of billions of dollars by the time it's actually said and done.
So before we started recording, you talked about how on a regular basis you speak with clients who are eligible for some forgiveness and have no idea about that. Is that kind of what's happening here? The administration is trying to publicize what's currently available and that not enough people are taking advantage of it?
Absolutely. So the IDR waiver is very similar to what happened last year. So let's go back last year. Last year was the public service loan forgiveness limited waiver, and that ended on October 31st of 2022. Basically, there was a period of time there from October until almost May where we didn't really know exactly what the IDR waiver was going to entail. And actually, when the last time I was on your podcast, we were making some guesses as to what we thought, but we didn't have those exact. They didn't release the rules. And so it's hard to play by the rules if you don't have the rules, right? Well, they've since released exactly what this is going to be. And basically, it is the PSLF limited waiver, but they've beefed it up. So do you guys want me to talk about why it's so important right now?
Exactly. Yes. Yeah, because our listeners are probably as confused as we are about all of the different programs. So yeah, please walk us through.
Okay. So let me back up to one thing that you said, and that is that no joke, one a week, every single week since May, usually 3 or 4, where I will have people that come in and talk to me and don't realize that they're sitting on I call it their golden ticket, because basically when they talk to me, we look at it, their file, they've been teaching for, let's say 20 years. If you've only been teaching for a couple of years, this might not necessarily apply in the way that it's structured. But if you've been teaching for a long period of time, people are getting loan forgiveness right now as soon as they do a couple of things. Number one, you have to have direct loans. So that's the big one, is that a lot of the older borrowers have these FFEL loans, and they have to consolidate them right away. So the consolidation must take place. You have to have direct loans. Then you have to submit your employer certification form. So that's the PSLF application. And by doing so, what it does is we'll get all of your previous credits to count. Now, this is where the IDR waiver really comes in. What does it stand for exactly? Number one, it allows any payment that you've made, whether you have direct loans or not, to count. That's a big one. It's huge. Number two, it will allow you to get credit for any if you were in the wrong repayment plan. So before, to qualify for forgiveness, you'd have to be in an income-driven repayment plan. There are alternatives to this called the standard repayment. There are graduated repayments and extended repayments, and all of these do not qualify. Well, the standard repayment technically does, but all of these do not qualify for public service loan forgiveness, but now they do under the IDR waiver. Thirdly, any months that you were in forbearance, if you have 12 plus months, if you have 12 consecutive months or 36 aggregate months. So if you go back and add up all of your months of forbearance and it was more than 36, they are flipping those from forbearance status to in repayment status. So that's big. And then finally, any deferments prior to 2013, except for in-school deferments, they are flipping those from deferment status to repayment status. So basically, what this means is that there's a lot of potential credits out there. And I will hear time and time again where these people will say, well, I don't qualify, but you can still take a look. And then I'll look and I'm like, well, you do qualify, but it's only because of all the reforms that have taken place.
Okay, amazing. Let's go over a couple terms again. Forbearance, what does that mean?
Forbearance basically means you weren't paying on your loans. So there's a variety of reasons of why that could be. It could be if you see just like a 1 month gap in your history. Sometimes they do an administrative forbearance whenever you are switching repayment plans, for example. You could be in forbearance if you can request forbearance just because you can't afford your payment. So there could be a number of reasons why you are in forbearance. To get into why for your particular situation, the answer is it doesn't really matter. But the fact is that if you had 12 months in a row or 36 months when you add them all up, those are going to get to flip to the repayment status, which is gigantic.
All right, David. I've been a financial planner. I literally found when I passed my CFP, it was like I literally found the certificate that I got in the mail. This was like 20 some years ago. And I keep up with stuff. It's what I do. I do, 30 hours of continuing education every year. This is my weak point. Student loans is my weak point. Whenever clients talk to me about it, I'm like, okay, this is what I know. And you should not take advice from me because it's not enough. And then I began, referring them out. And I feel terrible about this, but it's my main point here is this is so freaking complicated. It's killing me. I feel like here's what I love about this. I feel like what I think a lot of our listeners feel about when they're starting to learn about the 403B, about the student loan repayment plans. And what I love about that is I can put myself in their shoes for once about something financial. And I don't like the way it makes me feel. I want to get smarter on this. But I also have a full-time job, run a nonprofit, have kids, but it's okay. We need to figure this out. So what else do we need to know here? What do we need to start with? Should we start talking about save right now? Where do you suggest we take this conversation from here?
I would say the very first step is that we have to get the IDR. So the save is important for the future, right? And we'll talk about that new repayment plan. I want to talk about it. It's very, very important. But before we get there, I want to stress how few people know about the PSLF limited waiver. They were estimating that only 15% of the eligible people for forgiveness immediately, 15% of all eligible people took advantage of the PSLF limited waiver. So that means 85% did not take advantage of immediate forgiveness. Now, from there, as I mentioned, I talk to people every single week who said, oh, I didn't think this applied to me. I didn't know that this was actually a thing. And it is. And so what we need to do, because you guys have a nice listener base, and there are some very prominent people that listen to this as well, including school district officials and people of that nature. is get this information into the hands of the employees at school districts. So this is something I would be talking to your administration about, pushing it up to district office of just, hey, this is out there. And not only, like, think about how great it is from an employee retention standpoint when you say, hey, we're going to provide help that can get your employees potentially $100,000 of forgiveness or $50,000 of forgiveness. That is, to me, that's a massive, massive thing that a lot of districts should be looking at, of like, hey, we make this a priority, and in doing so, we take care of our employees. But all of that to say, there are hundreds and hundreds of thousands of teachers and other people that are working in public service and nonprofit right now that are sitting on what I call their golden ticket, and they don't even realize it.
Okay, so two things. First, I feel like school districts need to add in a new position, or add the responsibilities on to someone in HR, or contract this out to someone who understands. But this feels like a huge opportunity to attract new employees by telling them, we will give you free consulting on your student loans to help put you in the best position to have your student loans forgiven. They won't promise that they're going to get their student loans forgiven, but one, we'll help you figure out if your student loans can be immediately forgiven. Two, we'll help you figure out how to set yourself up going forward to ensure that these are, forgiven. I do understand that this involves kind of like tax advice, so they might not really want to maybe take this on, but I feel like this is important enough and could really change how they attract and retain employees by this very, very simple employee benefit. It sounds like that's what you're saying. Am I right?
Exactly. And there's a number of schools that do that already here in Missouri and Kansas that have a full-time, student loan consultant that they contract that out to. And depending on how, there's a lot of different ways to set that up, but it doesn't cost the district all that much. And some of them have it as a district benefit, a paid benefit, and others have it as, kind of like when you're going through your benefits with like voluntary life insurance and stuff like that, where you can elect to choose to talk to a certified student loan professional and then pay the fee in that manner. But either way that they want to do it, as long as the employees know that they have somebody in their corner that's fighting for them, in my opinion, which I'm very biased because, I talk about student loans all day, every day. But having somebody that does that for you, to me, would tie me closer to my district and say, like, these people actually, care about me and are willing to support me in that endeavor.
Absolutely. So let me ask you a different question. I think I know the answer to it, but you had mentioned only 15% took advantage of the PSLF limited forgiveness. Why do they have to do anything? Why can't the government or the Department of Education look at the current information and just say, oh, you meet the qualifications, done, forgiven? I think I know the answer to this, but I would like for you to, you tell us, why is that?
So there's two big pieces of it. Number one is that you have to have the direct loans instead of the FFEL loans. So FFEL loans are privately held. They're not owned by the government. So they can't really cancel those because, well, they would get hit with more lawsuits than they had from the $10,000 in forgiveness if they tried to forgive these loans. So they have to have direct loans. So it does take that one step of doing the consolidation to get out of that FFEL status and into the direct loan status. Once they have direct loans from there, that's a good question at that point. I suppose the only thing, so the second step of it is to fill out the PSLF application. This is getting the employers to sign off to say, yes, you were in fact an employer in our public service or nonprofit job during a certain time frame. And I don't know how great their information is. I don't know if that's something that they should have on file or not. But to me, that's also doesn't seem like it's not the easiest application to fill out, but it's also not the most prohibitive application to fill out. But it's just knowing that you have to fill it out. And so I think that that's one of the things that they could streamline a little bit. But why? I don't know. Maybe they don't actually want to give as much forgiveness as what they're giving. And, the loan servicers don't necessarily want to do it. Mohila is the one that
Right.
they're the ones that, hold all the loan forgiveness applications, and they process all that. And yet they're also a company that's trying to make money. So it's kind of a double-edged sword there.
So my thought is that because people have to fill out the certification that they actually work for a public, public entity. But I mean, it seems to me that they could just look at the EIN number from their W-2, match it up, and then they would know, right? Am I wrong on that?
You're not wrong.
All right. Well, so PSFL, you told us the PSFLF limited forgiveness ended on October 31st, 2022. But did it end? Or what has replaced it? What are we doing? It seems like people are still eligible for something like this. You just said that you're still talking to people, and you're literally giving immediate forgiveness. So who are those people? Is that part of PSLF? Is that part of IDEA? What are we talking about there?
So we're talking about the IDR waiver.
We are still talking about, okay.
So the IDR waiver, which is also that $39 billion relief announcement that was made last Friday. Essentially, they just bundled that up and said, we're going to call it something else just to make a headline, right? You got to have the headlines to make it look good. So it's the IDR waiver. It's been out for a little while, but the rules really became clear in May. This is basically the exact same thing as the PSLF limited waiver, but they tacked on those other things like the forbearance credits counting and the deferment credits counting. Essentially, what's going on here is that they're giving the PSLF limited waiver another year of life. So you have until December 31st of 2023, as of right now. Now, they've said this before in the past, and they keep pushing stuff out. But right now, they're saying you have until December 31st, 2023, to get your applications in, to get your to get your status of your loans from forbearance to direct, and get all the paperwork done for this. Now, this is for public service loan forgiveness. The IDR waiver is much, much bigger than that, because it will actually allow the people who have been in repayment for a long period of time to go back and basically collect these credits as well, and get closer to the 20 to 25 year forgiveness. I think probably a large portion of your audience is in public service, as teachers, as professors, as school district employees. And so I don't think that it's probably going to be in our best interest to talk about the IDR waiver on the private side, just because it gets more confusing, right? And when you add in more confusing information, then people don't take action. So here's the thing: it is out there. The IDR waiver, it works. It will help you get closer to public service loan forgiveness. I hate using all the acronyms, by the way. So it'll help you get closer. If not, you might be there already, and you may get that immediate forgiveness. And I see it, like I said, every week. 50,000, 80,000, 100,000, 20,000. The numbers just are mind-boggling to me of how many people. And when we're talking about $80,000 of debt, that I was actually working with somebody earlier today, where we were getting the consolidation and making sure that his application was going through. He is going to be eligible for $83,000 of immediate loan cancellation in the next, let's say, 2 to 3 months by the time that they process his application. And to me, that's unreal. And it's why I continue to do what I do, is because when I'm talking to him and he's going to have $80,000 wiped off his record, he's looking at it as a new life.
Oh, absolutely. I mean, it is a new lease on life. I mean, and I bet you like half of that $80,000 is like interest that accumulated,
It's crazy. It is absolutely crazy.
I heard someone talk the other day. I'm a big fan of TikTok, and this person was on there, and they're talking about, listen, like, they're acting like we're getting something for free here. We're just asking that, like my student loans were like $30,000, but I've been paying on them for 15 years now. I owe $60,000. We're just looking to, like, at least not have to pay all of that interest that is accumulated. It's a lot of this is just this capitalization of interest, this reverse compounding in action. And
well, I want to actually jump in here for a second, because this is something I'm super passionate about. Because anybody that says that, in my opinion, is full of shit. I'm sorry for the language on that, but I got to say it anyways. Because here's the deal: is that if somebody chooses to go into a public service role, they choose to go into a role that they know that they're likely going to make a little bit less money on than they would in the private sector. there's a program called Public Service Loan Forgiveness that was built for public service employees and nonprofit employees for this very reason. And when people come out and say all this stuff about, oh, you're just trying to get loan forgiveness, you're trying to make the taxpayers pay for it. Guess what? This was started in 2007. You may remember back there was a President George Bush in the White House at the time, and then it made it through the Obama period, then it made it through the Trump period, now it's in the Biden period. What are people talking about? This was a bipartisan vote where it was, hey, let's help out the people in our communities that are going to take care of our communities and our future, including our children. And so if anybody says that, like, tell them to get a life and get off, whatever. I don't even know what to say on that, but there's that makes me so mad, because the program has been around for such a long period of time that right now we've politicized everything in our environment right now. But this public service loan forgiveness has been around for a substantial period right now.
I wish it had been around for when my wife went into teaching, which was 1998. That would have been very helpful. It just would have been very helpful. Now, I completely agree with you, 100%. This capitalized interest is something I want to get to here in just a moment, but let's just recap this before we move on. People who are listening to this are educators. Even if you're not an educator, remember, this is called public service loan forgiveness. This applies to, well, you tell us, David, who's the public? Who does this apply to?
Anybody who works for a nonprofit, doctors at public hospitals, nurses at public hospitals, pharmacy, people that work in pharmacy for public entities, anybody who's working in a school building. It doesn't even matter if you're a teacher necessarily. So anybody in a public school building, librarians, nurses, as I already mentioned, nurses, firefighters, police officers. I don't actually, that may be about all that I know, but anybody that works in a public service job. So, and you can actually check to see if your employer is eligible or not on studentaid.gov/PSLF.
Ooh, that's great. Let's say that again, studentaid.gov/PSLF. You can look up whether or not your employer is eligible. That's a big deal. Okay. So someone who has student loans, they were taken out after 2007, who's been working in the public service, get a consultation. Worst case scenario, you're out a few $100. Actually, you're not out anything. And we're not selling consultations with David, but do be very aware that there are a lot of people out there who claim to know this stuff who do not, and are looking to use PSLF, loan forgiveness, and student loan planning as a way to sell you financial services products that are probably not in your best interest. David, who should be, and this is a little self-serving, but who should our listeners be seeking out? Obviously, you're an expert in this. You, at some point, aren't going to be able to help everybody. Who should they be looking for in it if you couldn't help them, which we're going to tell everybody how they can contact you and get on your calendar. But if you fill up, who should they be looking for? How should they look create that search?
Yeah, so there's some great student loan planners in our very community, by the way. So there are former teachers turned financial planners. I believe you guys know them, but Justin Garrett up in Baltimore, Andrew Katzmoses out of Maryland, myself, and then there's actually a bunch more. I was talking to Tim Whalen, who you guys just had on recently, and I think he's going to start trying to go down this route. But there's quite a few that I talk to. So many teachers who are considering either getting out or are already out of teaching, who are working to become, financial professionals in some manner. And I always say, like, you've got to start with the student loan planning, because it is such a, the thing that I learned many years ago, and this was actually my wife was the one that did it, pointed me this direction. But my goal, whenever I first came on your podcast, my goal at the time was, the budget teacher. My goal was to help people with their budgets, kind of get them on a financial track, financial coaching. And my wife said, nobody wants to talk about their budget. Meet people where their pain point is. And the pain point is student loans. Go to that. And she told me that back in 2020, which was great foresight, because who knew that all of this reform was going to come out. And, you know, we talked about this prior to the show, but I sucked enough early on where I could learn and figure it out. And now since 2020, I've done over 400 consults. And at this point, I wouldn't say I know everything, but man, I've seen a lot of different scenarios. And so there's always every once in a while, there's one that will baffle me and I'll have to do some research on it. But I've seen a lot of things.
So, David, there's just one more thing that you and Dan and I have in common, and that is these incredible genius wives. Like, they just make us look so much better than we actually are. So, a shout out to your wife, David.
Yeah, I honestly would not be here without her. She said, you have to go do this CSLP, Certified Student Loan Professional designation. It was the very first thing that I did prior to receiving any other any other designations, and it has been the most valuable by far.
I feel like I need to get that. Here I've been a financial planner since, like, I don't know, 20 some years I've had it. And like, here I am learning from kind of a new guy on the block. And I just think it goes to show that it doesn't matter how far into your career you are, there's always new and interesting things that we need to learn. Now, before I want to talk about SAVE, but I want to ask, Dan has this great question. I love this question. I don't even know if you know the answer, but how many educators okay, you already told us about how many consults you've done, but can you even estimate how much money you have saved clients or teachers through this loan consulting that you've done?
So the last time that I was on your podcast, what did we say? I think it was about, I tallied it up for that one. I think it was 8.5 million the last time. And that was probably 4 months ago or 5 months ago. Like today, for example, I met with somebody that's going to get $84,360 forgiven. I had somebody the other day that, like, I get messages every day of, oh, thank you so much, blank was forgiven. Oh, thank you so much, 50,000 was forgiven. I would say it's got to be over 10 million at this point, but I don't have it. I don't have that exact number. Last time I actually figured it up for you guys and tallied it up, but maybe 10 and a half, 11, somewhere in that ballpark.
Wow.
It's crazy.
I just, I can't, I don't have any words. It's incredible. Like, and how does that make you feel? I know this is not the topic of this podcast, but like, that would make me feel so good. And I know you get paid for it. It's your job, but come on, that's got to make you feel good.
Well, and let me tell you this too. A lot of my the consultation's free, right? So people will come to me and I'll point them in the right direction. And the only way that I charge is if they want help implementing it, really is the kind of the idea behind it. And so I give it away. And, part of it's just trying to help the community. And that's the big part that's beneficial for me because I feel good about it. But as you mentioned, part of it is it's tough because it takes 4 or 5 months for the whole thing to materialize into forgiveness, right? Or it can. And sometimes it happens very quickly, which has kind of been mind blowing lately. But it is a great feeling. It is. And just knowing that somebody's future life is transformed because of a potential hour interaction is just kind of crazy. But to bring it back to what you were saying, again, it's such an astronomically large number to me of like 10 million that it's hard to wrap my mind around.
It is. What I love about it is that you kind of get this immediate hit, like the 403B stuff we all do at 457, we are setting people up for long-term success, and we're going to save them so much money in fees and commissions and stuff like that. But that takes place over the next 10, 20, 30, 40 years. Like, you get the immediate hit. I think that's really neat.
Well, another thing that we were chatting about prior to the show, and this is something that I think is very important for everybody to know, or at least consider, is we were talking about 403BYs and the progression of how many years it took for you guys to get to where you're at now. And the same thing with me on the student loan side. Like I said, 2020, luckily I did not charge people back then. I was doing it for free to try to figure it out. But looking back, even my deliverables were awful. I look back at some of that stuff and I'm like, oh goodness, like I hope I gave these people like the proper advice but part of it is you got to get in and get your hands dirty and know that you're going to not be good the first couple of times. And this applies to just about anything. Dan was mentioning, even as a teacher, your first year, by the way, you're not going to be very good. And you're going to look back at that and be like, oh man, look at where I am in year 1 compared to year 5, 6, 7, and 8, and just the iterations that you go through to make a lesson better or to have classroom management. My classroom management was so awful my first year. But the same thing applies with anything that you're trying to do in life, is that you're not going to be very good the first time, and don't give up. And the same thing applies to trying to figure out your 457 or start a budget or anything. Whatever you do, if you got into a 457 with one of these crappy companies, don't beat yourself up over it. We're all learning and we're trying to figure this stuff out together, right?
100%. I love it. This is great. Okay, so now I want to focus. I'm not sure how much more time you have with us. But what we need to focus on is this program that has been released. It's called SAVE. You said what it means. I already forgot it. But when I've been studying this program, and I believe they just made some updates to it after the Supreme Court decision. So, and I think the last time you were on, we even talked about it, but it wasn't called SAVE at that time. So can you walk us through what it is and what it means? Because when I look at this, it's such a revelation, and it has completely changed how I recommend people go through college, depending, even if they're not going into public service. So let's do this. So let's talk about SAVE. What do we need to know about SAVE?
Okay, the acronym that starts with Saving on a Valuable Education. I guess they had to make it something, right? So SAVE is the name of the program. So basically, first of all, how you can get into it. So right now, I just did a consolidation literally this morning. So I can tell you that it's not available on the consolidation page. You cannot get into SAVE right now. You have to go in through revised pay as you earn. So by going into the revised pay as you earn route, sometime we're hoping before October 1st, they are going to change that from repay to SAVE. So basically the SAVE is a couple of big things come from it. Number one is probably the biggest one is that you have now the ability to file your taxes as married filing separately. So by doing so, you can only show your income for tax purposes. Now, if you're in a community property state like California, when you do a married filing separately, you're going to be adding up your income and basically doing a divide by 2 on that. So it's not quite as great as some of the other states, but a lot of states, like in Missouri, for example, if you're a teacher making $50,000 and your spouse is making $150,000, you can only show your income on for student loan repayment purposes. So by married filing separately, that's number one. Number two is they actually use the federal poverty guideline, and this is where things get a little bit tricky. But they use the federal poverty guideline to determine what your repayment's going to be, and usually using the federal poverty guideline, they determine what you can subtract off from your income, from your adjusted gross income. So if you have a family size of 4, which again, this is where it gets confusing, especially on a podcast where you can't see the numbers and you can't actually see it. But if you have a family size of 4, the federal poverty guideline is at $30,000 associated with a family size of 4. The old repayment plans all had a 1.5 multiplier on this that you can deduct for that 30,000 times 1.5. You could deduct from your income. With the new SAVE plan, you can now deduct a 2.25 multiplier. So what that means is that if we take $30,000 and multiply it times 2.25, a family size of 4, you can deduct $67,500 from your income that doesn't get counted towards your student loan repayment. Okay, so that's big right off the bat. So that 2.25 multiplier is big. Question?
No, my jaw's dropped. I mean, it's a podcast, so people can't see my jaw dropping, but like my jaw was dropping, not because I have a question, just because like, wow.
Now, the only caveat here is that if you file your taxes married filing separately, you cannot count your spouse as a member of your family. So
okay,
it's okay, but we'll battle through. So if you file separately, then you would have to have 3 children and yourself in order to have that family size of 4. So take that into consideration. So if you were making, let's say that your family's total income was $100,000 and you filed your taxes married filing jointly. Okay, so $100,000 minus the $67,500 would mean that you would actually owe on the $32,500 that's left after you make that subtraction From there, right now you have to take a 10% multiplier of that number. So from there, you take the 10%. So you'd owe $3,250 for the year. And then you could divide that by 12 to find out that you're going to be paying about $270 a month in your student loan bill. So that's how they come up with these calculations. In July of 2024, they are going to make a modification to the SAVE plan where then you will be able to have, and this is very unclear right now, so let me say that going into it. They're going to allow you to do a 5% of the total on all of your undergrad loans, a 10% of the total on your graduate loans, and then they're saying that there's going to be some sort of a weighted average in there if you have graduate and undergraduate loans. What we don't yet know is what happens if you had consolidation loans, that now you've got a graduate school loan and undergrad loans that are all put together in this consolidation loan. They haven't given very clear guidance on what that's going to look like. And I don't know that they have the systems to be able to tell what was graduate and what was undergraduate from that. We'll see how that plays out. But the answer is we don't know yet what that's going to look like.
Okay. And this is where it gets even cooler, because my student loans, well, really my wife's student loans, I had a very small amount, but we could not make our payments when we got out. I had started a business. We had a child. My wife was working, but only part-time, and as a teacher. And so we were in forbearance for years. But even if we weren't, I mean, our income wasn't too high, but the problem was the interest was capitalizing on our loans. So in the scenario you just gave, the maximum payment they would make throughout the years, from around $3,000 total, whatever that is on a monthly basis, a couple $100 a month. That loan is accruing interest at a rate that's probably somewhere above 5% now. Does that loan capitalize interest? So the amount that's above that amount, I'm only making $3,000, whatever it is. There's interest accumulating. What happens to that interest now?
Yeah, so it gets subsidized by the government. So if you're making, let's say that you have that your required payment is $100, and you're only going to make a $70 payment each month. That means that before you would have had $30 that would have been accrued on your loans every month, and it just keeps on going. That extra little bit is going to now be subsidized by the government completely at 100%. And so your balance will not grow on your loans. Now, you may be only paying interest forever. And if you're going for public service loan forgiveness, then who cares? But if you're not going for public service loan forgiveness, if you're in the private sector and you're listening to this, then this is huge, because your balance is not going up, which means that when you hit that 20 to 25 years, if you're working for 20 to 25 years on that forgiveness plan, when you do finally get the forgiveness, that's taxable. It's taxable forgiveness. So if they subsidize the interest along the way, what it means is that in that final year, you're going to pay substantially less than what you would have otherwise.
Now, my conclusion from this, and like, tell me where I'm wrong here. Originally, it was like anybody who thinks they're going to go into education, even if they have the money, should take out the full direct loans that they're offered. I know it's not a lot. I mean, the most you can get year one as a freshman is $5,500. Same for year two as a sophomore, and then it goes up a little bit for your junior and senior year, and then it's a lot when you get to graduate school. So, I mean, we're not talking about huge amounts of money, but it seems like not just educate people who are potentially going to go into public service, but it feels like everybody, even if they have the money to pay in cash, should take out these loans. Am I wrong, or is there a scenario where I'm wrong here?
So if you're in public service, I'm not going to say that it would be smart to take out more than you need, but it might be in your best interest. You never know how it could play out. If you're not in public service, I don't know that would still be a good idea, because unless you think that you're going to keep a very, very low income for the next 20 to 25 years of your life, and then you're going to invest that amount into a taxable account, and then there's some scenarios where maybe, but the thing is that over a 20 to 25 year period, you have I don't think that you could predict what your life would look like 25 years ago. I certainly, well,
No.
I'm 38, so I don't think I could have figured that out 25 years ago. So all that to say, to me, that doesn't seem like it would be a good route to go.
Well,
But
let me ask it this way. When you get into college, everybody has this idea of what, not everybody, most people have no idea what they want to do, but some people know what they want to do, right? So maybe they're going to be going to education, maybe they're not. But what if, I mean, you don't know. I mean, you go through your first couple of years and maybe you change majors, and then you're kicking yourself because you could have taken out those loans and had them potentially forgiven. From that standpoint, um, does it kind of still make sense to take out the maximum loans even if you don't need them, and save that money? And then if you graduate, you start your career, you start making money, you're like, okay, yeah, I'm not going to qualify for PSLF, my income is going to be higher than I thought. I've got the money, I'm just going to pay it off. So you're not investing that money, you're saving that money to pay that off. Does that make sense? You're basically creating an option. You create an optionality with your student loans. Does it make sense from that standpoint?
my answer is going to be no, but only because I know human behavior. And if you give an 18-year-old $5,500 of loans and they don't have to spend them on school, I don't know a whole lot of 18-year-olds that are going to turn and be like, you know what, saving this would be a good idea. So I just think that.
Okay, so let's take it just from a technical standpoint. You probably would agree, but you're talking behavioral. But I get that. I do get that. I get that. From a behavioral standpoint, you have to be very careful with this because that's a bunch. That's 20-some thousand bucks that you could end up owing and never paying back. But
yeah, let me ask you this:
okay,
if you gave a college kid, which they do all the time, a credit card. By the way, you can get that by filling out this form and getting a free pizza or a free sub at Subway or something like that. How many of those applications then go on to be $20,000, $30,000, $40,000 worth of debt after 5, 6, 7 years? So the thing is that to me it's a slippery slope to go down to take on additional debt, just because whether you have the intention of it's like, oh, I'm going to save this money. Well, guess what? Your first couple of years once you graduate from college are probably going to be a little tight. They're going to be a little lean. You're not going to be making the money that you thought you were going to make a lot of the cases, right? And so then you say, oh, well, I'm just going to dip in just a little bit into this student loan money that I put aside just for this very reason. Oh, well, it's only 6.8% interest. That's not a big deal. And then all of a sudden you've built in your, now you've tapped into your reserves, and now you owe back $15,000 of debt that you weren't planning on owing. So in my opinion, I wouldn't take out, there'd be very small reasons of why I would do that, because to me, it just seems like a slippery slope for people to make easy mistakes and get themselves into a world of hurt.
So for the average person, maybe not the greatest idea. For someone who is, for someone who's really paying attention and appreciates that optionality, maybe. But let's just bring it back to people who are going into education. Good idea. Take out those loans.
Yeah, at this point, it doesn't seem like a bad idea, because if you go into education, especially here in Missouri, I can speak to this, but the starting salaries are still $40,000 or less. Well, in the middle of the state, it's crazy. They start at like 30. But so if you're single, then right now you'll be able to deduct $32,827 off of your loans. And basically have a $0 payment on the first $32,000 that you make. Well, in a lot of the areas of our state here in Missouri, which is we know is very underpaid as far as teachers, they're going to come out making $0 payments for the first couple of years. They may get to where they're paying 20, 30, 40 bucks a year. But and I've seen some salary schedules from like North Carolina. Oh my goodness, they're getting robbed. With a master's degree and a top end of 25 years, they're making $56,000 or something crazy now.
Yeah, I know.
So you may as well in those situations. Yeah, it might be in your best interest to have some debt and then know that they're going to get forgiven, especially if you can tack on a master's and a specialist and all the things that you're going to go for. If you're going to do those anyways, and you're going to have to take loans on them. Hey, I want to go back to one other thing that's super important that I just looked at my notes here and I forgot to mention when we were talking about the IDR waiver. That's possibly the most important part of it. is that consolidations right now are giving you the longest repayment history on all consolidations. So let's throw some real numbers in here, because this is stuff that I see all the time. Somebody graduates from undergrad in 2008, and they've got 115 credits on their loans for public service loan forgiveness. Then they went back, and let's say they got their master's in 2020, and they only have 20 to 30 credits on their loans for their master's degree for public service loan forgiveness. Right now, until the end of the year, you can consolidate those together and get the longest payment history, so that 115 credits applied to all of your loans. So I'm seeing people that have graduated from college within the last couple of semesters who have basically no credits, but they have that one pesky undergrad loan that they thought was the bane of their existence, that turns out we can wrap all their loans together and get them all forgiven. And so that's kind of one of the cool things that's been happening lately.
All right. Last question. There is a super important data file that you basically need from everybody. Am I correct in this? Tell us about that data file, what people need to do to get it, because I'm actually looking at doing this for my in-laws who actually still have a student loan. I'm not sure they're actually going to qualify, but so everybody needs to have a login, and they probably already do, but maybe they forgot it. But this is very important. Tell us about that.
Yeah, so there's a data file on studentaid.gov. So studentaid.gov is kind of the overarching body of the student loan servicers. They keep track of where your loans are at, the repayment history, everything like that. And actually, last year when we did a webinar, Dan and I had people pull their student loan data files and get us the copy prior to the webinar. And I got on there and actually showed 3 people that they were eligible for forgiveness on the webinar live, which was really fun. But the data file will show every school that you've been to, when the loans were taken out. They will show, actually there's some other important information, but they will show, if they got consolidated, how they got consolidated. But then they also show what repayment plan you're in right now, how many credits you have towards public service loan forgiveness. And then the big one that's actually going to come up here soon is when your next recertification date is. Because basically, if you're on an income-driven repayment plan, you have to recertify your income each year, and but they're not making you recertify for the first 6 months after the pause is lifted. So the first 6 months, so I believe it's going to be October to March. If your certification falls in those 6 months, you actually won't have to do your next income recertification until the next year. And they're going to use 2019 data for your upcoming repayment unless you do a consolidation or have done a consolidation in the last 3 years. And that's important to know, because sometimes it's important to get the consolidation in place if you have varying repayment history. So if you've got 2 loans that are, one has 115 and one has that 30 or 20, you would really want to do a consolidation then. However, on the other side of that, if all of your loans have the same repayment history on them, you don't want to do a consolidation, because likely you were making less money. And there's some obvious examples that we could counter this with, but most people were probably making less money in 2019 than they are today. And so by doing a consolidation, you'll be using 2022 tax data. I guess the question was, actually, I got off track of how to get this file. So it's on studentaid.gov. Up in the top right-hand corner, you will see your name. When you do a drop down, the third drop down says, and it changes sometimes. So if you're listening to this at some point in the future, it may look a little different, but it'll say My Aid. And then on the right-hand side of the screen, on the My Aid page, there's a blue hyperlink that says download My Aid data. Now, here's the problem. You won't be able to look at this data because they package it up in a text file that looks ugly and gross. And I've got a program that can read this thing and make some sense of it. But even if you could view it, knowing what it means is basically what I've done for the last 3 years of trying to figure out what all these numbers mean, because it's very, very confusing, even if you had the program to read it to be able to view it.
Okay. Wow. So David, I look back on all that Scott and I have done, speaking in front of teachers, being on different podcasts, hosting podcasts. That event we did with you last July, that's episode 228, where in real time, you told people how much money you could save them because they downloaded that data file. I just want to say that is probably a top 5 highlight for me in my financial literacy journey.
That was a lot of fun. And to see some of the reactions on there, it's great to be able to see that, like you said, in real time of getting to show people, hey, we're going to get you $80,000 of forgiveness.
Wow. And I know how hard you work, but I also have to think, wow, what satisfaction you must get when you're able to do that for your clients. So again, David, thank you for all you do. People are listening, they think, oh, I might be eligible. And correct me if I'm wrong here, David. It looks like there's maybe a couple ways to go. One, they could try to do this on their own, and they would start at studentaid.gov. Is that correct?
That's correct. Yep.
Number two would be working with someone like you. Why don't you walk us through what that's like? But before you do, we'll just say we're going to put a sign up link in the show notes. So that would be the way to begin the process. But go ahead, David. What information can you share with someone that's thinking, wow, I think I want to work with David? And again, as Scott said, we've received no compensation from you. This is just, something that you do.
Yeah, the link that I've given you to put in the show notes will actually have several links in there. And one of them, I always push to subscribe to my newsletter. That's where I push out all the up-to-date student loan information. My goal is to get you everything that you need to be able to do it on your own. From there, there's several other things that are listed there, including our website. But one of them says, free 30-minute student loan consultation. They could book a time. Hopefully it doesn't get too crazy, but it's already been picking up over the last month. But hopefully there's some times that are still going to be available for people to sign up. And then basically we do a 30-minute consultation. I'll pull up your file. Well, I'll have you download your file ahead of time, but send me your file. We'll look at it together. And then basically I tell people, hey, here's what I would do: consolidate or not consolidate, get the student PSLF application. And then, basically, do you need help implementing this? And we charge a flat fee, $500 for the implementation, basically, and walking them through that. The other aspect of it is sometimes you don't, we'll go the other route of it. Sometimes you don't qualify for the immediate forgiveness, right? Because you still have to put in your time. And so if they want a plan of how to minimize basically their student loan payment moving forward, that's where we charge also to help them come up with the plan, implement it, and then moving forward, here's the exact steps of what you need to do each year to be successful on this journey.
Look, it sounds like money well worth the cost, and the fact that you have a free 30-minute consultation, I just think makes it so palatable. David, is there anything else you'd like to share?
No, I would say the one thing about the do-it-yourself, I think it's a great option, but if you mess it up, it has big ramifications. And so I don't say that from a side of like, of just pushing my services necessarily, but I've seen some people that have done things along the way that when you do them, like if you consolidate and you don't need to, that can cost you big money, for example, or if you need to consolidate and you don't. So one of the things I saw recently was somebody who had not done a consolidation, submitted the PSLF application, got a set of their loans forgiven, and it's going to be left with $40,000 of additional loans that they're going to have to pay on for forever, or for the next, until their PSLF 120 credits gets applied. And if they would have consolidated ahead of time and wrapped all those loans together, they could have gotten the entire balance forgiven. And they didn't know what they didn't know. And so, that unfortunately, that's the way it is.
Oh, wow. Oh my gosh, it almost seems like, well, this is obviously extreme, but Russian roulette. I hate this complexity. Scott and I talk about this in Saving for Retirement. It's a tax. We think of it as a tax on our time, and ultimately it's often a financial tax. And then I think, yeah, David, you want to share something else?
Well, and the problem with that, as you just mentioned, is that it is a tax, and the people that can afford to pay it are the people who probably already paid it. And it's the single mother of three who doesn't have time to figure all this stuff out, who can't or doesn't have the resources or the time to be able to find somebody that can help her with these types of situations, which probably happens a lot more than the 2-teacher household that have no kids with plenty of somebody who's working in a high-paying district that can afford such services. So it's just the hard aspect of it, is that the people that can afford it sometimes are not necessarily the ones who need it the most.
Yeah, it's so true in so many facets of life. I would recommend that folks sign up for your newsletter regardless, because this is why you got back on our radar. We get your newsletter. It's terrific. I like the personal stories. You have kids. You talk about, is it track and field, right? You used to be very involved in track and field. That whole thing with
Yeah.
like the starter gun and time
Yeah.
keeping. I think I even emailed you after that. Was fascinating. So please, folks, do that. It'll be available through that link. David, I have a feeling we're going to have you on the show a few more times to talk about this topic.
I'm happy to do it. Yeah, there's a lot of information out there and it changes basically every week. So I'm happy to do it.
And we should mention who you work for. We didn't mention that yet. So we should definitely put a plug in for him and in your team.
Yeah, so I work at a company, we go by Teach, Plan, Retire. We work with educators from across the country in financial planning. I work with Michael Eagleson and Tom Farrar, and we just, I'm super, super proud of the work we do. And I think that we provide some great assistance to teachers and their families all over.
And I think I could speak for Scott and say we can concur. Oh, and last thing I'll say is you mentioned some names of people that also do this: Jason Garrett, Andrew Katz Moses.
Justin Garrett.
What did I say?
You said Jason. He's been on
Jason,
our
okay.
podcast.
Only twice. Sorry, Justin. What I was going to say is you can get a hold of, we've had them on the podcast. So if you Googled their name with Teach and Retire Rich, Justin Garrett, they're both members of our Facebook group. So you can also join the 403 BY's Facebook group, and you would be able to be in contact with them. David, thank you so much. I know we'll be talking to you shortly.
Thank you very much. I appreciate you both.
Wow.